Okay, so first of all, like usually, we look at the daily close, which is always important to look at. So yesterday, we clearly closed above the 50%. If you remember yesterday in the early morning, we were here. I said we should normally close above this 50%, and we closed way above it. We had a very nice long push as expected yesterday, which is great. And today, of course, we open here. We went a little bit down on the London Open just right at the beginning of the time channel. And then we started to bounce a little bit, which should see some follow through. So we are here. So we have two options. Yesterday, we had a nice push up. So it's possible some people will still try to sell it. And we have a lot of euro data to come. In about half an hour, we have a lot of German data, and then in 1 hour and a half, we have another big lot of Eurozone data. So we can see a lot of volatility in the next days. We are at the end of months, which means we should see profit takers acting. In this case, people who have been buying USD we could see some sell-off on it, but that's what could happen. But for now, we are anyway acting intraday, so we don't really mind about that. But a lot of volatility for sure, and a lot of data to come in the next hour, 30 minutes, and 1 hour. So that's where we are now. So nothing has changed a lot since yesterday. We bounced on the 61.8 of that ABC up. Yesterday, I was long here. I still have some long from there. I usually bank mostly everything. I just keep very little overnight, of course, protected, but it's just to see if we could have a run up. So the next big thing now will be to break, if we can today, this 38.2 again here and the 76 there. So then we would open for the 23.60. That would be the next step. And the next step of the set would be the 61.8 of this quarterly, the big quarterly level. So that's what we could have if we would see, for any reason, an acceleration on the upside. We have this level, which is a big target, and we will sell it there because we will have tons of sellers at this level. And we have this 23.60 in the middle. The sister of that 76, which is the 61.8, is way higher, is here at 112. But that would be the longer term target when we would break there, and we would have to break the 50% of the ABC on the way. So that's not for now. For now, that's where we are, what we have. So if we look a little bit inside here, so I said the 38.2, so this area is an area we need to break. This thing here need to be broken to see a continuation on the upside. So this thing here with on the bottom the 61.8 and on the top the 76.40, which is the retracement of the last huge swing on Euro USD. So that's the first, and then we would have of course the previous top here with a double top, probably something like this, and then we would need to break higher. But what is very important, if we want to see a continuation, is a daily close above the 38.2. That's the first point. And then a daily close above the 76.40. So that's what we need. On the downside, we already spoke yesterday about this. We don't need to spend a lot of time on that. We could double bottom there if we would have, like on datas or something like that. We could, if we had something very bad, we could double bottom and then fly again from there. And or if we have something very strong, we would reach this area with the 76.40 as 0.9857 and the 61.8 as 0.9853. And I would be hardly long at this level, of course, with a setup. But when we would get there, it would be with a setup. So that would be, I would be, as I repeat, hardly long. I would put the house on it. So this is the other chart, is exactly the same with the same levels, with the different things. I have some volume things here that I don't have on the other chart. So, and weekly and daily open that I don't have, but we have exactly the same thing there. So nothing has changed a lot on that point of view. Now let's look and refresh a little bit the setups. So we go to the setup chart. So that's just confirm me if you can well see the setup chart. Each time I change chart, I like you to confirm, please, Jonathan, or I don't know, whoever is in the room, just give me a yes if you can see the chart with the setups. Okay, fantastic. So that I know, like, not like yesterday I was speaking and you could not see the chart. So we will do that each time I change charts. I will ask for a confirmation. So concerning the setup, we go back on the 7-period multi-time frame chart. We still have the huge monthly, very strong monthly tailwind. We had this long setup yesterday that has started to push a little bit, could come back lower, but we have here some tailwind too, as I said. On the 4-hour, we are arriving near some highs. We need, for real pullback, we would need to go above this 80%, this 80, like this one, for example. This one was a perfect pullback with the 1 hour and, of course, a 15-minute and 5-minute confirmation. The 1 hour is in between everything, so it has room on both sides. Concerning the 15 minutes, we are in the bottom. So we are playing the long always for now. We keep on doing the same thing because we have the tailwind of the big time frame and potentially the monthly flow helping us in the same thing. Concerning the price 6 multi-time frame, same thing as yesterday. I just refresh mine here. Very strong monthly. This is the monthly now I'm showing. Very strong monthly here. Very good weekly at the same time. Very nice daily with a divergence, which is, as I say, suggesting we have some help on the upside. Beside the signal, we have a dynamic divergence. On the other one, for now, we have nothing because we already went up. Probably when I took this long here, it was green. Sometimes it doesn't stay because it starts to be green. And on the close, if we went up before the close, of course, it's disappeared. But we have room to go up here. We have room to go up here. We have a lot of room on the daily. I don't speak about the weekly and the monthly, of course. The monthly is a few thousand pips. So we can play that as soon as we have a 5-minute and the 15-minute time setup. Oh, look, nice push. I need to bank a little bit more. Oh, great. 1 second, please. Oh, I like this move. I don't know if there have been some leak on the data, but that is really nice to see. So 1 second, boom. Took some here, plus 35. Okay, so I just post it here. Okay, because I have to keep on doing what I do all the day long with banking and everything. So that's clear from there. Now we go and have a look to the Dixie, because where we are now is very important. We keep that in mind. So let's look at Dixie. Dixie is screen 1. Here we are. Please confirm when you can see Dixie. So I start immediately, and I'm sure you see the same chart. Fantastic. Thank you. So we have Dixie. So Dixie here is important. Let's look at the daily close. Same thing as usually. So yesterday close, we had a red candle after a push up to the 88.6 and the trend lines here that we have seen already. So you remember those trend line. We have this trend line area. We stop on the 88.6 fib, inside fib here, and then we pull back to close right there. Still above, yesterday close was above the 61.8. That's that we open and close above it. So that's something we need to keep in mind. On the upside, we still look potentially to the 1-to-1 extension or perhaps the 78.6. We should keep on respecting this trend line, even if we go lower, come back one day, and things like this. But we know that as soon as we will go over the 10th of September, something like this, 9th, 10th of September, we should have something in place for the next quarter. That's my feeling. So that's why it's very important now, because we are at the moment of where we could post the high for the next 2 or 3 months. That's potentially what I am looking at on Dixie here. By the way, you see that the push up there was very little above this previous high, was really a very little push just to take weak stop and come back lower. If we look intraday now to have the confluence of information together with the Euro USD, you see how well we stopped on the trend line yesterday. That's really nice, together with the 80.81 and this trend line here. That's 2 trend line there. So what do we need to look at now? Of course, the 50%, because it has been holding. It's an inside fib, 50%, but it has been holding. And it's the same family of this one, the 88.60 fib. So this one need to break, and I think it will. When I look at the momentum, I think we can see a nice push now on the Euro USD due to the time it happened, this move here, the turn on the Dixie or the start of the Euro USD move up. As you know, I speak a lot about this time channel at 7:30 GMT. Generally, when a move starts at the beginning of the channel, it goes on for the next 90 minutes. So that's something we can see. It's happening right now. We are speaking about it. So we can break through this one, and then we would have the next area to look at would be here. I think we have some monthly or something like that support, but we have this price gap that has been holding the price nicely, even if we went through on the end of last week, on Friday close, we went through it and then we came back quickly above it. So this area will be important together with the price gap. I will unlock it. It's a 1-hour price gap. You can find it on your chart. Okay, so this area will be important if we break through this one, and I think we could break through it. We have data in 15 minutes, so anything can happen with the data. We can reverse, go up, and then come back lower. We will see what data gives us. So this is the first area, and of course, the next big time for the Dixie will be this 88.6 fib upside ABC. We never touched the 1-to-1 extension, which is something I would like to have seen. I said it already many times. Let me bring that to the back so we see the fib better. So this is the sister fib of that one. This one has already provided and show it was a very reactive fib. In many occasions, you see here how many times it has been holding the price. It will do the same here. We broke through it, and it will do the same on when we will come back in this area. So that will be a place where we can see a bounce. If we arrive there and together we have the Euro USD at one of the level we mentioned just before, which could be the 2360 fib or something like that. I think that would be the 2360 fib. I spoke a little bit earlier at 101.72 on the Euro USD. So if we have this one together with the 2360 at 101.72, that would be a short scalp on the Euro USD, even if we stay long on this instrument. We can trade both sides, especially when we have a confluence and everything. Okay. So let's go back now to the Euro USD to close this little daily update. And for the one that came in the middle of the update, you will have a recording available on. You will have a recording available soon on Twitter. So I bank a little bit more of that one. 1 second. Okay. So you see, we have, that was last week lows. It was a weekly low here. So that's why I have this one, not last week, but previously. You see this one has been holding, by the way. So many people, they just, it's a resistance because it's a resistance. No, it's a resistance because there is a reason behind, or a fib, or a volume support, or an ABC, if it's not a retracement, as I said, or a price action like order block or something like that. And that's all what we use to trade here. So we are now here. We mostly took this, this little high that was yesterday high. Then we had this consolidation. So usually, I mean, the classical trader or the usual trader would see here an ABC, which is what we do, or they would see, I would better say, they would see here a flag pattern, what they call a flag pattern. So one, and then usually what they do with the flag pattern is they take the low, they take the high, and they move it to the start here, and they say this is a target. Well, that's a little bit, let's say, prehistorical for me. But I mean, you take the ABC, and what you see, you have exactly the same time, but in the middle, you have all the level where you can expect a reaction. So that's much more precise, and that's what I like to do. Anyway, whatever you use, here you see only the one-to-one. When you use the ABC, you see everything. So I prefer to see everything than only the one-to-one. So potentially, if we keep this low here, if we keep, and only if we keep these lows, which has, if you see, very well been holding since yesterday, we have a kind of basement here, but we have data to come in a few minutes. If you want, I could even look at the data with you inside the, I could stay online for the data. After that, I will have to get out for a few minutes, and then I would come back. So this is the ABC we can look at if the lows are respected. Let me check if I'm right here. Okay, very good. So this is a low. If we look at it on the 4-hour with Heikin Achi, it's very nice. Look at that. Nice swing up. The B is here. And the C in that case is or the 61.8 extension, which is right there on the double daily support that I have here, or the one-to-one extension, which is, if we look a little bit above the weekly open and a little bit above the previous day highs, which was on Friday when we had the announcement of the 75 points hike in September that they could look at. And then we had the Powell interpretation that was, in my opinion, a little bit exaggerated, but that's only my opinion. And so they all bought again the USD, and they only saw the fact that he was speaking about inflation, but not that he was speaking about the economy giving some signs of slowing down, which is, do you all see the Euro USD now, please? I have not looked if I was okay on the chart. Okay, great. So on the Euro USD, that's where we are, as I said. So on Friday, I think it was really exaggerated because they didn't took in consideration the two things he said about the employment that was starting to show some sign of slowing down. Of course, they are in full employment, so that is one more reason why it would be very sensible. I mean, it could react very hardly on the employment, and the fact that the growth, some investment are postponed already in US. The growth is slowing down. The consumer confidence is low. So there are many signs that are telling us that the engine that was in the very high level can slow down, and that's what we have been expecting here. At the same time, Euro has been way too underpriced, has been way too oversold in reaction to the war in Russia. Of course, it's a war, but I think market has lost completely the habit of a war in the big countries that are making the worldwide growth. And that's nice. We didn't have a war near us for a long time, but now we have one, and we had a tension with China, but that's not, I think, a reason to really overreact like this, especially when we think that the international slowdown or recession for 2023 or something like that, if it affects one, it will affect everybody because all the economy are linked one to each other. So that's all for now concerning the Euro USD. You have this ABC up. So as I said, I will just put it a little bit thicker. So you can use it for the next area we would look at. I will stop now, and then if you have any question, just ask me. I will answer right now. If not, I will do another intraday update later if we have some big changes like a pullback lower or something like that. Of course, I will come back and make another live. Okay? You're welcome. Have a nice day. Have a nice trading session and a lot of money in the pocket. Bye.